than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars, they watch me disappear. I'm so fly, man.
Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host, Nathan Birch, and this is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Guys, it's 2023. What is happening? The world is going so fast. Lots of cool things happening out there. Lots of things people are scared about. But today, I'm going to be talking about the opportunities that I see out there in the market. So there's a lot of talk about the world being in a recession. There's a lot of talk about, negativity out in the marketplace. The reality is that I believe, looking at all the data that's out there at the moment, that we are fundamentally in a recession, right? Soon they'll come out and say, oh, we're in a recession. What is a recession anyway? A recession technically is 6 months of negative growth. And if we look at the growth that's been happening out there, people go, well, things are booming. But if you go and speak to businesses, whether it be a tradie, whether it be someone at a local retail store, whether it be someone with, government contracts, whether it be someone, doesn't matter where in the system, and it should ask these questions to people just to see what's happening out there. And they'll be like, oh, things have been tight, I had to stop this, I have to stop that. I was talking to someone the other day and their staff had asked, can we get a coffee machine in the business because we don't want to spend $6, it's too expensive to go buy the coffee at the coffee shop. And, if you think about it, a coffee shop with one office that's out there, someone puts a coffee machine inside their business, they save $5. I don't know what a coffee goes for. Let's call it $5. I guess that's what it'd be. $5 for a coffee times 10 people, there's $50 a day. If that doesn't go into the cash register of the guy in the coffee shop downstairs from their office, well, then that guy doesn't have enough money to go and spend elsewhere in the economy, and we have a tightening in the economy. And you'd have to be asleep to not realize that we're already in a recession. They haven't declared it a recession. There's all these negative words out there, but I think by the time they say that we're in a recession, they've done a lot of things to change the course of action and for us to head back into a boom. So if we look back in September 2019, a lot of people don't realize that we're in a recession way before that. So we actually entered a recession in 2018, and they started printing money in June 2019. They started dropping interest rates, putting stimulus packages out there, first home booster grants and all these sorts of things. A lot of people out there didn't realize that had occurred. And you think to yourself, if the economy was so great before 2020, let's just use inverted commas 2020 there. If the world was so great before that, why did they start dropping interest rates? Why were they putting stimulus packages in place? And then you start seeing all the people that have just been watching news and they go, oh, well, we've got the corona tax. Everything's gone up because of corona. Everything's gone up because of this. It's like, no, hang on a second. It's gone up because they printed more money and injected it into the system. They've got more liquidity out there that's gone in, and people now have access to cash flow, and then they've been spending that on certain things. So if we look at the economy at the moment, we're sort of somewhere in and around mid-2019 sort of level where we haven't, actually I'd say it would be late 2018. We're in a recession. They haven't called it a recession. They never called it a recession back then either. They just started putting liquidity and injecting liquidity in the market. They did certain things such as dropping interest rates, making new government sort of grants for people, whether it be for homeowners, whether it be for green energy, whether it be for whatever. Then the central banks around the world did this thing where they did the repurchasing agreement. So some bank went bankrupt. I don't know which bank it was. No one really knows which bank it was. But every day at the end of the day, if you remember years ago, you've got Osco now, but it takes about 3 days for your money to clear from one bank to another. And that's because when the banks close, they work out their funds, they send their funds around. But some bank had been insolvent, and the central banks had to step in and do all the repurchasing agreements, and then they distributed the funds in the back end there. And that was another level of stimulus packages that were being injected in the market at the time to keep the system chugging along. And ever since then, we've just seen one stimulus package after another stimulus packages, Job Keeper, Job Booster, Job Saver, Job Creator, Mortgage Booster, whatever bloody things they come up with as scams. All these things have been removed. All the liquidity has been taken out of the market. All the interest rates have gone up. But as I've talked about on other sessions, we're now at a point where governments are going bankrupt, they're insolvent, they can't, the bonds that they have to go and get today are much higher than what their debt was, like 7, 8 times higher than what their debt was only a matter of 3 or 4 years ago, or even last year. So we're now in a really, really uncomfortable position globally. And a lot of people might be just listening there and going, doom and gloom, doom and gloom, doom and gloom, doom and gloom, better not do anything, better be scared, better be scared. But, if you go and look at the real successful people out there, a lot of wealth is created in times of fear. And I would much rather have a recession than I would have a boom, because on bad news, things become on sale. On bad news, you can use that to get the things you want. On bad news, people get scared. And I see the opportunities that are out there. I don't think it's going to be, there's people out there talking about house prices dropping 20% and stuff like that. They also said that when Corona came, and they also said that many years ago, and it doesn't happen. So if we go back and look at, just for example, right, we've got massive inflation at the moment. Everything's gone up in value. Everyone's concerned. Their package of Smith's chips have gone up to $5 a pack. Their burgers now $10 instead of $5. Everything's gone up in value. If you go back and go, hang on a second, I could get my food at half price. Imagine if there was a sale on at Woolworths or Coles or wherever you're looking at buying your food from, or whatever, and you would have purchased something on sale and it was 30% or 50% off, you'd be very motivated to go out and pick up that thing on sale. But when it comes to financial markets, people are very scared, right? So if you go to Coles and you get a bottle of soft drink and it's 30% off, you'd buy a half dozen of them. But if you look at crypto, Bitcoin's now down 50% from its peak, or 60% from its peak. Most stock markets around the world are down about 30% from their peak. If we look at some property markets, some have dropped maybe 5, 10%. Some have gone up 20%, even though that we're in a technical recession at the moment. So, what things can you do, and what would you expect after the recession? And I think that the recession that we're in has a very short and finite timeline of the next 6 months, 8 months, 9 months, 12 months. Like, I believe when we enter into 2024, we'll no longer be in that recession, because they're going to be, over the course of 2023, injecting liquidity in the market. And if you think back to what happened in 2020 and other sort of times when they've injected liquidity, such as 2008, 2009, what has occurred to financial markets? Things have gone up and there's been a boom, and that's the opportunity that is out there. So my view, when I talk about negativity out there, I'm always looking at, okay, how's it going to affect? I'm playing a long game. I'm not playing a 6-month game. I'm not a little pussy that gets scared of some news. I'm looking at things logically, holistically, and looking at the opportunity and looking at the long game, because that's what I do. So when the next boom comes, when will that be? I can't give you that answer, but you'll see the boom occur once they start injecting liquidity in the system. That could be dropping of interest rates, that could be new stimulus packages, that could be green energy packages, that could be any sort of chaos that they have around the world. It could be a climate crisis, it could be an energy crisis, it could be any sort of crisis that they have. I believe that they will mask it with some sort of crisis. The writing is on the wall for that. And I'm not being a conspiracy theorist on that front. It's evident that there's going to be something that comes out and they go, well, this is what caused it and this is going to be our solution, and they do certain things and we see the next boom. So when we see that boom, what is going to happen? Well, we haven't really seen a crash yet, right? And some things have gone down in value, some things haven't. But what will happen when they start printing? Well, I believe we'll start seeing things like crypto going up. You've just seen in the last week or two, you've seen them go up, 10%, 20%, 30%. You've seen some stocks go up. We're seeing commodities go to prices that we've never, ever seen beforehand. So you've got coal prices that are now, we're not even exporting coal to China, and coal is like triple its all-time high. We had a mining boom back in 2007, 8, 9, 10, 11, 12, whatever it was, the years that it was here. And the cost of commodities, as a country here in Australia, we've got so much valuable resources in the ground. We haven't even seen a boom in the commodity sector, but we've seen the prices go to levels that are so far greater. So I believe we're going to see a mining boom is one of the things that we'll see. We're going to see stimmy checks floating around in all different areas, whether it be put solar panels on your roof, whether it be change all your taps in your house, whatever it may be. Sell your petrol car, we'll give you money for your car and you buy an electric car. Those sort of things will be happening out there over the next few years, in my view. As we start seeing the boom flow through, people will, you've got a solar company selling solar panels, you've got a car dealer selling these new electric cars, and everyone's installing electric charging stations around. The coal's going through the roof, the iron ore's going through the roof, China starts building again, these sort of things come out of the ground, and that's where money starts flowing through the system. So I believe we're almost at the worst part of the market. It could be a big day of paper assets dropping before they start turning on the money printer. Who knows? But looking at the opportunities, that's the exciting part. So if you look throughout history, every recession, the low that you see through the recession gives you a dip of opportunity. And on the other side, things soar back past through it. So I'm a big fan, I'm a contrarian investor. When I'm buying, I'm always looking to buy the things that are on sale, the things that nobody wants, because that's where the value is. Why would I want to go and participate in buying a house in Sydney with no eaves on it for, $1.5 million when I can go buy 3 blocks of units for $1.5 million and get myself $5,000 a week in cash flow coming from those properties, not $700 or $1,000 a week from an overinflated house. So looking at the opportunities of markets that are depressed, whether it be property, whether it be shares, whether it be crypto, whether it be whatever you're investing into, you want to make sure that you're picking up things of value, because if some idiot paid a higher price for something 2 years ago, 3 years ago, 5 years ago, the chances are that you're going to find someone come back. But if there's better market conditions, it's going to go and smash those old highs. So as a property example of this, one of the markets that I was very, very heavily involved in was the Southeast Queensland property market. I used to buy about 50 properties a month in between, say, the Gold Coast to the Sunshine Coast through Brisbane. But those properties now have gone up from 150 grand to 500 grand, and I don't see the value in them. So why would I come in and buy them at 500,000 when I could buy them 5 years ago at 150, 200,000? All my investors made lots of money from those properties because they've all gone up a lot and considerably over the time. But at the time that we're buying for 200 grand, I remember people used to say to me, Nathan, why do you want to buy a property that's 200 grand that used to sell for 300,000? And I'm like, well, when the property was selling for 300,000, interest rates were 8%. It's now a 4% interest rate or a 3% interest rate, and I'm picking it up for 200 grand. So the day that it goes back to where it was, all the market conditions, you've got higher rent, you've got higher inflation costs, you've got higher build costs, you can't build it for the cost of what we're paying for it. The pent-up demand is to push that thing through the roof. So a lot of people get caught up on a hype, and that's where the suckers come in, right? And that's where people go, oh, I'm going to buy this, it's a good area, and they try and justify it to themselves. I only justify things in itself as looking at the intrinsic value of what I'm getting. Can I rebuild it for that price? Does it have upside for the growth? Does it have, is it very, very cheap on the day? Has it sold for more prior? I never buy things at the top. It's just something I don't want to do. I don't want to be buying at the top of a cycle. And I think that's the contrarian view that I have, is that's what's worked, is what's been successful when we get to hundreds of properties and hundreds of millions of dollars worth of net worth in my position. So looking at the fact that we are in a recession right now, people don't think we're in a recession. They'll wait for the news to tell them that they're in a recession. But once they say that you're in a recession, it's already been 6-12 months worth of recessionary period, and they're doing things to turn that recession around. And I believe that we're right in the eye of the storm right now. And as soon as we start seeing them, putting these measures in place, I think it will be very important for, I know that I'm sitting there with my trigger ready to pull to go. That sounds really bad. Pull the trigger. That sounds really bad as well. I'm ready to take action, should I say, there's certain things and protocols that are got in place to really push it this time, because we're going into a hyperinflation. There's the level of inflation, they can't even control inflation. They've put all these things in place to control inflation and try and generally what would stop inflation. And all it's done has exacerbated inflation. It's only pushed inflation on. When they say that inflation is under control, it doesn't mean that things have come down. when they say they've got inflation under control, it just means that your hamburger's only gone up $1 this year and it hasn't gone up $3 like it did last year. You know, it's a level of that declining, the amount of inflation declining. It's not that we're heading into a deflationary depression. Do I think we're going to enter into a deflationary cycle or a depression? We're going to end up in a hyperinflationary depression from the level of currency that's being printed out there. So looking at the opportunities that you see in a time like now, I'd rather be buying in 2023 than I would be in 2021 or 2022 or 2020. The reason being is that in 2020, 21, 22, you had so many more people out there that you're up against when buying something. If there's less people, there's less competition, means better value, better opportunity, and better things on your terms. So when we see a boom, we're going to see more competition. When we see a boom, we're going to see less opportunity. At the moment, we're seeing more opportunity in some of the markets. In markets of value, like, let me tell you, seeing the property market for 20 years, it's 20 years since I started buying property this year. I've never seen every single market go up at once. I've never seen every single market come backwards at once. The markets are counter-cyclical. So Perth might be going up and Sydney might be going down. Sydney might be going up and Melbourne might be going down. Each market has its time, and you need to look at what markets have the opportunity in them and where's the opportunity within those sub-markets. So in this period of time, if we were to see a boom, and this is where I think a lot of investors screw up every time they have an opportunity like this, is that if you think about this, people are saying, I'm going to wait for the bottom of the market. I'm going to wait for property prices to fall. I'm going to wait for this to occur. You might save 10 grand, 20 grand, 50 grand on a property. Okay, big whoop, right? If the market was to double tomorrow, would you have enough assets to take you through that market? Would you be able to service for the assets to go through that market? So what I mean by that is many people 12 months ago, before interest rates went up, could have bought 20 properties in their portfolio and been fine. Those same people might only service the 3 properties today, right? So there's a very big difference. If the market took off tomorrow, who cares if the market goes up by 20 grand, down by 20 grand? It negates itself. If you don't have the ability to get a hold of those assets, you won't be able to have those assets to take through the next market cycle. So, I think everybody should be sitting at the start of 2023. I'm going to call it out there. We're not in a boom yet. It's not going to be called a boom for a long time, right? But I believe that we'll start seeing the boom occur somewhere around the middle of 2023. Are you prepared? Do you have all of the assets that you need to take through to the next market cycle? And I've seen people in the last 3 years be able to retire. I've seen people in the last 3 years being able to, quit their job. I've seen people in the last 3 years in a very different position now than what they were 3 years ago. And that's really all it takes if you have the assets. I've seen people in the last 3 years which are miserable, and they might be very happy in life and appearing very happy, but miserable because their mindset has stopped them from being able to take advantage of the opportunities that were there in 2020 or the opportunities that were there in 2018. If you need 10 properties to go and retire and you've got 1 or 2 or none at the moment, how long is it going to take you to acquire the 10 properties? 1 year, 2 years, 3 years, 4 years, 5 years? How long is it going to take you? Most of my investors get, 3, 5, 10 properties in a year or 2 years. It's fitting those assets in and waiting for all the suckers to come along and then buy up the market and drag your assets up in value. So have you got that plan ready? Are you actioning your plan? I see there's so many people out there actioning their plans. Have you, and this is where I think this market's very different to, say, something back in the GFC. There's so many people today. Just going to ask anybody, ask any of your friends that want to invest or whatever. Maybe it's a bad thing to say because a lot of people out there are negative as well. But I see so many people out there that want to invest, but they can't invest. Why can't they invest? Because the bank won't lend them the money. What happens when interest rates drop by 1%? We've seen interest rates go up by 3% in 12 months. If the interest rate can go up by 3% in 12 months, it can come down by 3% in 12 months. It can come down by 3% in 6 months. It can come down by 3% in 3 months, depending on how bad the economy hits a wall when they announce that it's hit the wall. So if interest rates were to come down by 1%, 2%, 3%, a lot of people out there that can't buy today will suddenly be able to buy, and they'll be jumping into the marketplace, and that will cause the next market cycle to take off. Will you be in a position to hold the assets and already have accumulated your assets before that occurs? The most important thing is that if we're now in a market which has got negativity out there, use it to your advantage. If we're in a market where there's a bad news out there, use it when you're trying to negotiate. When every day I'm in the marketplace, I'm trying to use interest rates, I'm trying to use Ukraine, I'm trying to use whatever it is to get what I want at the best value that I can get it at. So use the opportunities that are there to your advantage now. Have your plan and make sure that you've got your position right, because we know that after every bear market, which we're in a bear market at the moment, and you can't tell me that we're not. We've got interest rates that are 3,000% higher than what they were 12 months ago. You've got stock markets which are down 30% from their peak. You've got crypto markets down 50% from their peak. You know, what else do we need from a bear market, right? In a bear market, the stock market drops by about 30% on average per down cycle. If we're down 30% already, or 25% down already, we're almost at the bottom of where a bear cycle would be. So we know after something falls, things go up, and they normally go up much higher. But this time we've got a lot of different things fueling that. I'm not going to go into the amount of liquidity that's being injected and all those sorts of things. But if we know that we need to get our assets right, if it's going to take you 5 years to build a portfolio, you've only got 6 months before they start printing, before things start going up. You're going to be paying more for those things as they change the course of monetary policy. So where are you at, and where is your plan, and how are you planning your 2023 to take advantage? Because I still know there's people there from 2020 that are like, oh, I wish I could have got in the market. I wish I should have bought this property. I should have done this, should have done that, should have done that, but didn't take advantage of it. So make sure that you make 2023 your year. I'm going to call it out there that we will see a boom in 2023. I could be wrong, could be right. So little disclaimer there, but I'm very confident based on all the things that I'm seeing out that we haven't seen a crash and we're in a recession. So what happens when they change the course of direction and we start seeing all this new liquidity come in the marketplace? You want to have a plan, you want to have a strategy, and you want to be making steps closer to be able to reach your goal, because on the other side of this next boom, we go through a high inflation environment. Everything's going to become more expensive. Doesn't matter if it's your car, your household items, whether it be your food, whether it be anything that you have in your day-to-day life, everything's going to become more expensive on the other side of this. So I think the last few years has made it evident that that's the way that we're heading. All pathways lead back to real estate and people to invest into it. The economy is based from a high property market. You know, they say property's in a bubble sometimes. I look at the monetary policy and it's so interwound with asset prices being the property. So all wealth building pathways lead back to property. Make sure you have a strategy to invest into it and to take advantage of, you know, the time that we're in. If you need help on any of that, reach out to myself and my team, 1300 367 925, email us at admin@binvested.com.au, and make sure to subscribe. Find us on Google Play, Apple Play, Spotify, Facebook, YouTube. And if you like what we're saying out there and you like these podcasts, give us a like, share it with friends and family. We'll catch up soon. Have a great week. Bye.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar about to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you've been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system. Enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. And you're telling lies, I know what they been telling you. I'm the opposite, the Donald Trump of Australia. It's amazing, here for the taking, my time is never wasted.